In this tutorial, I'm going to show you how to use stops and limits, but not to close an open position, but in fact to open a new position for you. We choose a market, and let's look at gold. Now you have your trade button, as you know, and that's how you open a new trade, and you can place a stop loss or a limit order to take your profits on that when you open or afterwards. However, what you may wish to do is place an order to open a position but at a different level from where it is now. Okay, so if you click on the order button, what this says is this allows you to place your order. Now on this particular trade I want to place £10 a point, and I want to buy gold, but I want to buy gold if it drops further down, so if it's below the current price. So I'm going to be buying on limit because it's a better price for me. So I select place limit. Firstly, you notice it has to be a minimum distance away from the current market, but I actually want to buy this if the market falls to 1300. Okay, so we're looking at it falling a significant amount, but I think if it drops to 1300, I'm thinking perhaps that gold will then increase in price again, and I'm looking to get in on that move. I submit that. The order has been created. Much like a trade confirmation, you will get a confirmation that your order has gone through. Now, if I go in to the third tab here, opening orders, you'll now see that I have an order on gold rolling spot to buy £10 a point at 1300, based on the quote from World Spreads, and that it's good till cancel. Now, it's important you remember that. If this hasn't happened in 3 days' time and I change my mind, I will need to come along and select remove. That's buying on limit. Now there is an alternative. Again, I'm going to look at Brent crude for this one. I actually want to buy on stop. Now what that means is I'm going to buy, let's say £10 a point, if the price gets worse. Now the reason for doing that would be if you, for example, were trying to pick up on a trend, or if you think a market, if it goes through a particular level, will continue to move in that direction. So this time, the current price you can see here is around 1100. Now I'm going to say, if that goes up to 11500, that's when I wish to open my position. I'm doing this on stop because I could buy now at 1100, and buying at 11.5 is actually a worse level for me. But that's because, for example, I may be trying to pick up on a trend. So again, I hit submit, wait for the confirmation, close that window, and now we can see two different opening orders on the account. So I've got Brent crude buying 10 on 11, stop at 11,500. Again, check the current price, you know it's on stop because effectively I can buy at a lower price now. Also have an order on gold to buy 10 as well, a limit of 1300. That's on a limit because it's lower than the current price. So what I'm looking for is Brent crude oil to move up, and I'll get on the jump on the bandwagon, as they say, and gold to fall to a level I think perhaps it will rebound and then the market will move up. At any stage I change my mind, or I think this order is only good for the next couple of days and it hasn't been filled, I can come in very easily, select the remove button and hit confirm. Yes, I want to delete. It will tell me the system has deleted the order, click close, and you can see that it's gone from this tab. Again, remove, confirm the removal, we'll say yep, that's all done for you. And you can now see I have no opening orders. So there we go, that's the second way to use stops and limits. That's to open new positions at levels that are different to the current market.